Welcome to our weekly Forex forecast. And just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. And as usual, we'll start off by taking a look at our calendar here. So in terms of the broad themes that we have going on in the market currently, we have seen that markets are sort of kind of going into between risk on, risk off mode. It has been risk on for several weeks now because the markets are optimistic about different economies opening up. We have heard from different countries. Everyone seems to have a plan for how they're going to lessen the restrictions and sort of ease back into normal life as we had before this whole pandemic started. So that is positive for the markets because as more businesses open up, the economy will get going back again. And this is why the equity markets have been very positive about that. Now, we have had some other developments. First of all, China. So between China and Australia, first of all, there have been more tensions. They have been going back and forth. China does not like that Australia is calling for an investigation into the coronavirus pandemic and how it started and all of that. So that's a problem for Australia. Sorry, just a quick check here. Is everybody able to hear me? If you could please type in a yes. Okay, perfect. Thank you. All right, good. All right, so that's a problem with Australia, so a problem for Australia. And we have seen that China put some tariffs on Australian agricultural products and some meat products as well. Now, agricultural products only make about 2% of the exports out of Australia, so that's not a big issue. However, now last week they started talking about coal. So coal is a big export for Australia, and that would be problematic for Australia. So if China is not buying their coal, or if instead of buying Australian coal, they're starting to buy stuff from other places, that will cause problems for Australia. And we always and we have already been seeing with the coronavirus going on, the exports, of course, have not been as good for Australia because, first of all, tourism is a big industry there. Excuse me. Tourism is a big industry there, and with the borders shutting down across the world here, that industry has not done well. And of course, then second biggest thing is the education industry for Australia as well. We see a lot of Chinese tourists as well as Chinese students who go to Australia for education. So China has threatened that they are going to not allow that to happen. So they will do something about tourism and also university students. Now, so we'll have to keep an eye on to see how this situation goes. If it escalates, that is going to be a problem, and we may see Australian dollar drop as a result of that. Markets don't like geopolitical risk like that. Another thing we are seeing here also is tensions between China and the US. We have seen President Trump tweeting about different things about China. There have been some developments, I should say, in terms of they're not allowing Huawei to get the chips or the technology that they get from US. And then a second one also is a bill was passed in Senate where it will make it more difficult for Chinese companies to list on New York stock markets or I should say US stock markets. And so some of the companies like Alibaba and so forth, they may have to change the way they do their accounting practices in order to stay listed, and some of them will get delisted from stock exchanges in the US. And also President Trump has asked pension funds and other big funds to not invest in Chinese companies. So those are some of the developments from the US side. Right now, we have seen China is essentially saying that they are going to honor the trade deal, phase 1 trade deal that was basically put in place before the pandemic hit. Even though the demand has dropped considerably from China, they said they're still going to honor it. So from Chinese side, that's still okay right now. Another thing that China is doing right now is they have passed they're going to take stricter measures on Hong Kong. So they're calling these security measures, but they're really there to basically thwart the we saw a lot of protest in Hong Kong a few months ago. So this legislation that they're putting in place right now, they're going to send Chinese forces, and they're going to kill those protests, not the protesters, but protests. So they're not going to allow that to happen, and there will be stricter, essentially, military measures taken if there are protests. Now, US had previously, President Trump had said that should China do this, something like this, there will be consequences. So far, we haven't really seen anything. This was announced on Thursday, and on Friday, we have seen that the US has condemned those measures, but they haven't actually said anything. So China is basically taking advantage of the pandemic to make changes that they want to make. So at this point, we will see what the developments would be should this escalate, in the sense that should we hear from the US that they're actually going to take some measures against it that are not like lame measures, then we could see equity markets drop as a result. But if all US is going to do is filing a complaint with the World Organization, but not really doing anything about it, then I don't think there will be a big impact on the markets. So far, US hasn't done anything, so that's another thing we need to monitor. So one, trade relations between US and China, and second will be any developments on these new security measures that are being put in Hong Kong. So we'll see. And right now, markets have disregarded it. On Friday, there was, initially there were concerns when this was announced Thursday night, but Friday trading, we have seen that because US didn't do anything, markets went back to where they were. So those are some of the developments we'll have to keep in mind. So let's take a look at our news that's coming up. Now, we do see that we have, there's a bank holiday in both in the US and UK. So as a result of that, Monday liquidity will be low because a lot of traders will not be there. So just keep that in mind. When there is low liquidity, the moves tend to be more exaggerated than usual. So really the regular trading should come back into play on Tuesday. So the moves on Monday may not really be that significant. On Tuesday, though, we have consumer confidence numbers here. They are expected to improve a little bit. And the reason for the improvement will be because of the opening up of different states. So the consumer confidence numbers should come in a little bit better. New home sales numbers, actually, we are supposed to see a drop here. So the previous home sales numbers were not too bad. So if the number is kind of similar to what the expectation is, it will be fine, will not really have much of an impact. Now, we also have Bank of Canada and Reserve Bank of New Zealand, both of them here on Tuesday. At this point, Bank of Canada hasn't really done anything different. They have said essentially that they're going to hold the interest rate stable all the way into 2021. So there is no reason for them to go up. They have not talked about going into negative interest rates like Bank of England has. So I don't see any sort of an issue or weakness or strength in regards to the Canadian dollar from the statement, unless something changes. So again, it will be the comments that we'll have to pay attention to. So far, Bank of Canada or Governor Poulos has been out speaking quite a bit. And I think should his statement stay the same, I would not expect much of a difference. Reserve Bank of New Zealand. Reserve Bank of New Zealand has waffled back and forth in regards to what they have talked about in regards to the interest rates. So they said they were open to negative interest rates, but then recently recently, they have come back and said that at this point, they're not going to put in negative interest rates. So this is not an immediate concern, but they will watch and see. If down the road it's required, then they may go there. But for now, that's not a concern. That's why we have seen strength in New Zealand dollar. So if the stock market holds up, then both Australian dollar and New Zealand dollar are likely to hold up as well. We also have ECB President Lagarde speaking. Now, with ECB, we have seen that Germany and France put together a stimulus package proposal for 500 billion euros, and that is a positive development. ECB hasn't really done as much as some of the other central banks have, but that proposal, even though it has to be accepted by other member countries, however, there doesn't seem to be much dissent in terms of accepting it. There were a couple of countries before that were not too happy about it, but it seems like the majority is going to just accept it, which is good. And this is why we have seen euro strength over the last little bit here. There's also ECB financial stability. So it looks like we have 2-3 central bankers here. Again, with central bankers these days, they have been coming out and saying things out of left field. So we just need to pay attention to what they're saying, because it can move the market. Although at this point, everything is pretty much basically said and done, but we never know, right? And then we have business confidence numbers here. It was negative previously, but now with the lessening of the restrictions here, the business confidence numbers should be better than the previous numbers. So should that happen, it would be good for New Zealand dollar, and we're likely to see that go up. Capital expenditures here, these ones should about stay the same because the economy was closed, so nobody really should be making a lot of investments at this point in terms of capital investments. So I'm not expecting much change here, but should it drop, that at this point, the positive news is having a bigger impact than any of the negative news. So even if it were to drop a bit, I don't think that will have a big impact on Australian dollar here. And then on Thursday here, we do have GDP numbers, quarterly GDP numbers. At this point, they're expected to stay, stay the same here. And in terms of this one here, we're likely to see a drop because the economy was closed. So I don't think there will be a big impact here. Like I said, the negative numbers are not having as much of an impact because market has just accepted that we are likely to see lower numbers. Positive numbers, on the other hand, are having a bigger impact. So if the numbers are better than the expected, then that will be good for the stock market. So just keep that in mind. And we have the CPI numbers here from Japan. Now, Bank of Japan has been coming out and talking a lot about their economy, about the growth forecasts and so forth, and they have been expressing concerns about it. And as a result, we have seen that Japanese yen hasn't done as well as it could have done. But the last statement made by Bank of Japan didn't really talk much about the Forex side of things. They just essentially talked about their stimulus package for small businesses, small and medium-sized businesses. But in terms of the monetary policy, there was not much change. So that didn't have much of an impact. But the CPI numbers here, if they come in worse than expected and there's a substantial drop, then we're likely to see Japanese yen drop as a result, which means the yen crosses would go up under that scenario. Friday here, tons of data on Friday. So we have consumer spending numbers out of the Eurozone here. Again, they are expected to be negative because things were shut down. So no big surprises there. If they come in better than expected, though, that of course will be positive. And then we have Canadian GDP numbers here. At this point, things were closed. So not really for the month here, not really expecting a whole lot of positivity there. Personal spending numbers, of course, they're expected to be negative because nobody was spending any money. Now, Chicago PMI numbers, these are expected to be better. So we have seen PMI numbers out of Eurozone, US, and England. All of them have been positive because now the purchasing managers are actually buying stuff because they're expecting the economies to be opening up again. So these numbers are positive, and that's a positive thing for the markets. So as a result of that, we are seeing the stock market go up, which means our dollar crosses are going up as a result of that. So any of these numbers coming in positive will be positive for the stock markets here. And then we have Powell speaking, but at this point, I think they have been fairly open about how they're seeing the market, and essentially Fed is going to put their full support behind the market. They're not going negative interest rates. That is not good for the country, essentially. So they're not going there. But other than that, they have essentially said they're throwing everything into it. And if that stands, not expecting much of a change. PMI numbers here from China, they should go back up because we have seen Chinese economy open up. Now, there is another risk. We have seen a second wave of virus in China. Right now, the markets are not too focused on it because their markets are more focused on the economy is opening up around the world, and that's why there's a lot of optimism in the markets in regards to that. But if we see more numbers, or the numbers increase as the different economies open up, that will be a cause for concern. And this is where markets will really be paying attention to those numbers. So far, we are seeing an increase in numbers even in the US. There has been an increase in numbers in China. But for now, because we're still in the opening up of the different economies, market is more focused on that. So that's another development that we'll have to pay attention to for now. So looks like we're seeing rallies and protests in Hong Kong against the new China security law that they're putting in place. We'll see. So this is a geopolitical risk that we'll have to keep in mind, because if these protests become more violent and there's more widespread protests, then US will have to say something. And China has essentially, even on Thursday, there was a statement made where China said US better stay out of this one because it's a domestic matter. But so far, US has stayed out. But again, that can change the direction of the market. It can send it into risk off scenario, whereas we've been seeing risk on so far. So this is a development we have to keep an eye on, and any sort of risk there in terms of more negative stuff coming out will be bad for stock markets, which means our our dollar crosses and our yen crosses are likely to drop in that scenario. All right, so let's go on to our charts now. A lot of stuff going on in the market right now in regards to the news and so forth. But when we take a look at our charts here, we see that euro dollar here has been trading within this range for a while now, and we talked about this last time as well. And as we can see, price was at the bottom here last time, and it pulled back and then turned around, went into the high of the range here. But as we can see, there is a drop here from the high of the range. So at this point, what I'm looking at is maybe a bit of a pullback here and then a further move to the downside, especially if the protests intensify, or if we see that the US and China trade relationship deteriorates further. That will be negative here, and we're likely to see a drop. So far for now, this is neutral to slightly bearish. I would be looking for a move back towards the bottom of the range here. Target is 1.0765. So neutral to slightly bearish in terms of euro dollar. Pound dollar here, this one we see that price went, oh, thank you. So next one here is our pound dollar here. We see that there was a drop in pound and then price went up and retested our support level. So this is the range that price was trading in for a bit. And generally what we see is when price trades in a range and breaks out of that range, we see that price will go back and retest the bottom of that range. And price did that. So this was the range and there was a drop. Price went and retested, held below this. So now I'm expecting a further drop here. And also coming up in June, Bank of England has essentially been saying that they are open to negative interest rates, which is negative for the currency. So this is why we have been seeing a pound drop as a result of that. So bias here is bearish for pound. And do watch out for a bit of a pullback, though we could see it go back up again slightly into 1.2240 or approximately at that level, or even into 1.2200 or 2220, somewhere around there essentially. So I'm looking for a bit of a pullback here, anywhere from 1.2200 to 1.2250 in that area. And then looking for a drop from there. So something like this is what I would be expecting here. So bearish bias. In terms of our targets, the first target will be the bottom here, 1.2080, which is the base of last week's candle. And then next target is 1.1950. And now that price is broken out of this range, we could get this whole thing filled. So we'll wait for that, not looking for it to happen in next week, but over the next few weeks we could see price come back down again. We'll have to keep an eye on it. So for now, bearish bias for pound dollar. Aussie dollar here, Aussie has been very strong with the markets being optimistic. So Australian dollar is directly related to the stock markets. When the stock markets go up, Australian dollar goes up, and same thing with New Zealand dollar as well. And when the equity markets drop, we see Australian dollar drop. So the equity markets have been very strong, stock market has been strong. So as we can see, Australian dollar has been strong here as well. But it is still trading in this range. For the last 4 weeks, we have seen price stuck in this range. And at this point, it's just waiting for some sort of something that will actually cause it to move. So because it's been trading in a range here, my bias is neutral. This bullish candle here didn't really result in a breakout. And last week, price tried to break out of this range, wasn't successful. So at this point, I would look for a retest of the high again. And if it holds below that, then I am looking for price to come back down towards the bottom of the range then. But the biggest thing will be the retest of the high. If it holds below, only then am I looking for price to drop. But we have to watch out. It could try to retest the high there. So I'm not too keen on a long here, but if the stock market for some reason gets very positive, then it can break out and go into the high here. So this is why we just have to be careful. And this is where it could go to, should it go past our high. For now though, I'm neutral. I'm not bullish on this, even though we have a bullish candle close here. So neutral bias for Aussie dollar. New Zealand dollar, this one has turned around completely, again on market optimism. Stock market has been strong, and that's why we have seen New Zealand dollar put in a really strong turnaround here. Again, in this case, we see that price has been trading in a range for the last several weeks, 5-6 weeks here. And in this case, we do have a bullish candle close, but then again, we had a strong bullish candle close right here as well, but it was right into resistance. So same thing as Australian dollar, I will look for a retest of the high. And if it doesn't go through, I would look for a drop back towards the middle and the bottom of the range. So for now, the most important thing here would be a retest of 0.6150 level. So if it holds below, I'm looking for that move to the downside. So for now, bias is neutral here for New Zealand dollar. Dollar CAD here, this has been going sideways as well, just like everything else over the last few weeks. As we see, price did come back and retest the low here, and it's back into the range again. So this one also, with it being range bound, bias is neutral here. As we can see, price tested the low several times here and it hasn't been able to break it. So what I will look for here is a potential move back here for a bit of a retest, and if it doesn't break, I would look for this one to move back up towards the top of the range. So this one is neutral as well, and we'll just have to see if the bottom of the range holds. I'm looking for a move back up towards the top of the range. So overall bias still is neutral for dollar CAD. Euro pound here, this one has gone up considerably, especially with the Bank of England talking about negative interest rates. We have seen a price go up for euro pound. Now, the question here will be, can it continue? Because as we can see here, price is into resistance and it has pulled back. So today's or this week's candle close here hasn't been that bullish. It's a neutral candle here. We see pins on both sides that suggest that price rejected the low, rejected the high. So it's right in the middle. So bias for this one here is neutral as well. With us getting more towards going into the June here, or getting towards June, we will see more negative sentiment, or we may see more negative sentiment develop for British pound because of the potential of negative interest rates from Bank of England. So that can put pressure on British pound, which would mean euro pound is likely to go back up. So we'll keep that in mind. On the flip side though, if there are any concerns in regards to adopting the proposal put together by Germany and France in Europe, then that can cause problems for euro dollar. For now though, this is neutral. I'm just going to see which direction price wants to go, but it may end up doing one of these this week. So we'll have to wait and see. Therefore, bias here is neutral for euro pound as well. A lot of these, it just seems like market is just waiting for something to happen. And I think it's likely it's waiting for economies to open up and see how the consumers react essentially. All right, so Euro Swiss franc here, we did see a big move up in Euro Swiss franc, but price has pulled back. So if you take a look at the daily here, we'll see that price went and rejected the high. It couldn't get through, and now on the daily we do have a bearish candle close, and there's this inefficient move that could get filled here. So in this case, going back to our weekly here, basically this is the range it's been trading in. Again, a lot of these things have been, or a lot of the Forex crosses have been range bound for the last little while. So with the rejection of the top of the range, I would look for a move back down. Watch out for a bit of a pullback here though. But overall, looking for move back towards the middle and then the bottom of the range. So neutral to slightly bearish bias here for Euro Swiss franc. Pound Swiss franc, this is looking very similar to pound dollar that we saw. Price was trading in a range for the longest time. So this is the top of the range, bottom of the range. It went and retested the bottom. Now bias is bearish here. I would look for, so we have a pen bar, so I would look for a bit of a move back and then looking for a drop here. So bias here is bearish for pound Swiss franc. First target would be 1.1670, which is this one right here. And then we could see a move back into 1.1520. So bearish bias here for pound Swiss franc. Now, for some reason, if pound dollar turns, then all of these like pound Swiss franc, pound yen is likely to turn as well. Dollar Swiss franc here, this one hasn't really done much. Price has been stuck in this range and it is smack in the middle of the range right now. Neutral candle close at this point. So bias here is neutral. We'll just have to wait and see which direction this one wants to go. And the reason this one is neutral here is because US dollar was strong as well as Swiss franc was strong. So it didn't really get anywhere. So when, if we see the market going back into the risk off mode. In that case, this is likely to basically still be stuck in the range, because in that case, a US dollar is a safe haven currency, Swiss franc is a safe haven currency. So this one may not go anywhere because of the two strong currencies during that time. So neutral bias for dollar Swiss franc. Pound yen here, this one just like dollar yen and dollar Swiss franc here. Sorry, not dollar Swiss franc, my apologies. Pound yen and, sorry, pound dollar and pound Swiss franc. We saw pound yen do the same thing. And as we can see here, this one had also been trading in a range, and price broke out to the downside. And now we have seen a retest of that range and a drop from there. So Japanese yen hasn't, like I said, has not been as strong because of Bank of Japan constantly trying to verbally intervene in the market. They tend to do this quite a bit. They will talk down their currency because they don't want their exports to get too expensive. If their currency is too strong, then the exports become too expensive, and that is negative for Japan. And with Japanese yen being a safe haven currency, unfortunately for them, that is a problem. So they try to verbally intervene in the market and talk the currency down. So if they say our growth prospects are not that strong, that will have a negative impact on Japanese yen. And that's what we've been seeing. Regardless of that, though, if the market goes back into the risk off mode, so let's say the geopolitical conditions worsen, especially with Hong Kong stuff going on right now, that will be positive for Japanese yen, which means the yen crosses will drop. So I am looking for a drop here. So bias is more to neutral to bearish for this one. And I would look for a bit of a pullback, potentially even into 131.30 or 50 area, and then a drop from there. So bias is, like I said, neutral to bearish. First target would be 129.35-ish area. And then below that, we have 128.20. So those are the levels. We'll keep them there, neutral to bearish for pound yen. Euro yen here. Euro has actually been strong. As we saw last week, Euro did reasonably well. It went up across the board. Part of it was due to the proposal that was put forward by Germany and France, which is positive because they're going to support the Eurozone, which is great. Now, but as we do see, things did turn around on Thursday and Friday. We did see price drop here. So in regards to the weekly here, there is still bullishness in here. So I would watch out for that. But again, if the risk sentiment turns to risk off, this is likely to drop. So right now I'm neutral. I will look for a pullback into 117.80, but this one could go all the way into the high here of 118.50. So we'll have to watch out both the levels. But should it stay below 118.50, this is a strong resistance level, then I am looking for price to come back into the range here. I don't see, unless we start hearing good things about economies, as the economies open up and we see customers are back and they're buying stuff, then that will be positive. But other than that, I'm not too positive in terms of bullish right now. So neutral to bearish. Sorry about that. My puppy decides to bark. Okay, so here dollar yen. Dollar yen is looking neutral as well. We have a pin in the top, and then we do have a bullish candle close. So this is not completely bearish, but what will happen is, again, in the risk off scenario, dollar yen is likely to drop. So all yen crosses are likely to drop under that scenario. So we'll have to be careful with this one. So again, I would look for a bit of a pullback, and especially if it holds below this 108 level, I would look for it to come back down again. So right now, this one is neutral as well. In the risk off mode, it's better to trade other crosses, not dollar yen, because US dollar is likely to be strong and yen is likely to be strong as well. So dollar yen may not produce the best moves, but then we have pound yen and Aussie yen and all those that may do a better job of it. All right, so looking at our Aussie yen. Aussie yen, as we can see, has done really well. And a lot of that has to do with the equity markets being very strong. Now, it did run into resistance right over here. So we do have a bullish candle close, but I'm concerned about the geopolitical risk this week. So I am not totally bullish on this, even though the market is focusing on reopening of economies and being bullish about it. I would be careful here. I'm not too keen on going long at this point. In order to go long, we have to see price hold above this level. And if it does, then of course there is room to the upside, and price could essentially go all the way back up to where this move started when price started going back down, or price started going down back in February here. So for now, though, I don't think things are that bullish yet. So I am more looking at this being more neutral, on the neutral side. So we could get a retest of the high here at 71.10 or even into 71.50 level. But if it holds below that, I'm looking for a move back down, especially with the risk off scenario, should that happen. So this one, I'm going to say neutral for now, and we'll just have to pay attention to development. So neutral bias for Aussie yen as well. New Zealand yen, this one is looking neutral as well. As we can see, it has been stuck in a range for several weeks now. And as such, even though we had a bullish candle close here, see how price turned around because it was into the high of the range. So I'm looking for a similar behavior here, unless something extremely positive happens in the stock market. Right now, I am more on the neutral side. Now, the concern here, or the caution, would be if it breaks out, then of course there is a lot of room to the upside here. This inefficient move could get filled in that case. So we'll have to watch out. The price would have to hold above 67.50 level, essentially this level, for it to continue higher. But again, we'll have to we'll look at the daily and see how it progresses. But for now, I'm neutral. I will look for a retest of the high of 66.20, and if it holds below, I will look for price to come back into the range. So neutral bias for New Zealand yen as well. CAD yen here, this is similar. As we can see, everything is essentially stuck sideways at the moment, and we're just waiting for something to happen here. In this case, this is completely neutral. We have a bullish candle body, but then halfway through, we have a rejection of the high. So in this case, I would look for a bit of a pullback into that area, and if it doesn't hold, looking for a drop. Now we have to look at oil prices for this one as well. Oil has been doing well, so Canadian dollar has done well. If the oil prices start to drop again, then we are likely to see Canadian dollar take a turn as well, which means CAD yen is likely to drop in that scenario. So for now, this one is neutral to bearish for pound yen. All right, so let's take a look at commodities now. Start off with silver here. Silver has been interesting. We have seen a big move upwards. So gold and silver have, they were starting to behave like safe haven assets. But we have to be careful with this one because there are two different pressures that are playing into the equation here. One is gold and silver being safe haven assets, but on the other hand, when the markets are selling, equity markets are selling off, we are seeing pretty much everything sell off with the equity markets. So gold and silver tend to do that as well. So we have to be a bit careful with this one. This one looks neutral as well, though. If you take a look here, we see price went into the resistance, but the candle close here is completely neutral in the sense there's a rejection, as we can see from the wick, but there's bullishness in there as well. So at this point, I'm neutral on this one as well. Same thing, I would look for price to pull back into the support resistance area, and then if it holds below, we could see a dip here. So for now, bias is neutral for our silver here, and we just need to see price breakout in either direction. So if it breaks out, then we're looking for the high. If it breaks out in the bottom, we're looking for move back towards this 1540 level. So for now, we'll just have to wait. Neutral bias at the moment. Gold here. Gold has been a little bit bearish here, as we can see, and it was starting to act again like a safe haven asset. With the stock markets going up, gold tends to drop generally, but lately it's kind of been waffling between being a safe haven asset as well as kind of dropping and going up with the markets. So it hasn't quite settled yet. The candle here is again a neutral. There are pins on both sides. There is some bearishness in it. So this one could drop back down towards 1690-ish level. So we'll keep it in mind, but the biggest thing will be, can it break through the support? If it doesn't break through the support, it's likely to go back up again. So the test will be the support here from last week, which is 1715. If it doesn't break through 1715, I will look for a move back up. For now, though, neutral here. I'm just going to leave those targets in place, and we'll see how price reacts at the support level here. Oil here. Oil has been bullish, like I said, with China opening up. Chinese demand for oil is essentially back to where it was previously before the whole COVID-19. So at this point, this is looking bullish. I would look for potentially a pullback towards 32.00, and if it holds above, then we are looking for a move higher again. So bias here is bullish, and the move I would look for would be something like this. So bullish bias. Next target, first target would be the high of today, this week's candle, 34.70, and then 36.50, and then 38.50. So for now, bias is bullish for oil. Copper here, copper has gone back and forth. As we can see, it did try to break out of this range again that it had been trading in, but it has failed. So right now, this is again a neutral candle because we have rejection in this candle, but we also have a bullishness. So this is looking neutral for now, and what I would look for again would be a retest of this 2.40 level, and then we're looking for a move back down into 2.28 area here. So bias is neutral for copper as well. Bitcoin, I haven't actually, I don't have the latest prices here for Bitcoin. Right now, this one looks neutral as well. It's been caught in this range for a while here. So there is some bearishness in it. It could drop further, but please do check the weekend moves, as I have not looked at that yet. So this will cover this more in the daily analysis after the weekly moves here. S&P 500. Okay, stock markets here have been very, very bullish here. As we can see, price is back into the highs here. We do have a bullish candle close. Now, I am not extremely bullish on it at this point. So, so what we need to do here is keep an eye on the geopolitical environment. So the reason the markets have been bullish is because they're waiting for the different economies to open up, and they're positive that with the stores opening up, things will go back to normal, and that's a positive thing. Now with the geopolitical risk coming into market though, I would be concerned about that. And right now, as we can see, it's a risk on mode. That means everything is positive and happy. But if price is not able to break through the resistance, I am looking for a move back down. And this whole geopolitical situation's got to weigh on the markets. So keep an eye on the news feed. This will be critical this week. But for now, I am neutral. Even though we have a bullish candle close here, I am more on the neutral side of things here. If it does not break through the high, as it has tried last 2 weeks or a couple of times in the last few weeks here, if it doesn't break out, then I'm looking for a drop. But on the flip side though, markets can be very emotional. So markets can stay emotional for extended period of time. That means the positive sentiment can remain, and markets can shrug off all the negativity as we have been seeing lately. So should it break through the resistance though, then the next target here is 30.20, and we could see it go even higher into 30.70. So I am neutral here, but I'm going to leave the targets to the upside here as well, because should it break, we are definitely going higher. So this is again something we'll cover in the daily, and we will kind of assess it as things progress this week. But for now, I'm going to leave the higher targets in. But if it doesn't go through the resistance, definitely I am not. So I'm looking for basically price to come back into the neutral territory here, so neutral bias here. And same thing here we see for, and this is extremely crazy. We see that Nasdaq is essentially back all the way into all-time highs, and this doesn't make sense because the economies are still shut down, and the market is telling us that everything is hunky-dory and everything is great, which is not true. But the reason this is happening is because the companies that are open are the large companies, and those large companies are the ones that are listed on the stock exchange here. So in this case, in Nasdaq, we have a lot of the technology companies. So all the earnings that we have seen from Amazon, Facebook, Google, Zoom, all these companies that make up Nasdaq, they have produced great earnings, and as a result of that, we have seen basically Nasdaq almost go back to where it was. Another thing that's driving the stock markets right now is also the Fed putting money into the market, or pretty much all central banks are supporting the market. So all this liquidity and all this money that's going into the market is essentially keeping them up. And this is where we don't want to fight against the big entities. We can't fight central banks. So this is where it can continue to go up, even though the underlying fundamentals are not supporting the move up. So this is why it's better to wait and watch. So right now it is bullish, and as we can see, it broke through this resistance level. So this drop here, essentially everything got wiped out, and now we are into resistance. So my bias here is neutral to bullish. We could see price go higher. So if it breaks this week's high, we are basically looking at move higher. So neutral to bullish on Nasdaq here. Dow Jones here, this one is still in the range, just like S&P 500. We see that price is into resistance. So this one hasn't gone all the way back. Nasdaq is more technology. So this one still in the range here. So bias for this one is neutral. What I'm looking for is a retest. Excuse me, a retest of the high here, and then looking for a drop back down. So bias is neutral. We'll keep an eye on the high of 24,800. If price holds above that, again, all the stock markets are moving together these days. We can see it go higher. So bias here is a neutral, but if it goes through the high of the range, I would look for a move higher. So neutral bias for now. DAX here. So DAX as well, we can see, sorry, excuse me. So DAX here as well is looking quite bullish. It is into resistance though, and this is where it was previously as well, but wasn't able to break through. So we'll keep an eye on this. My bias for this one is neutral as well, because if it doesn't break the resistance, chances are it's coming back into the range here. So this is the range it's been trading in. So for now, bias is neutral for DAX as well. FTSE is the same here. We see the price has been trading in this range, and it hasn't quite gone through the high yet. So at this point, we see there's bullishness in this candle, but there's also rejection of the resistance. So this one is looking neutral as well. So I'm going to look for potentially a retest of the high, and if it doesn't go through, then looking for a drop back down. So bias here is neutral for FTSE as well. And then Nikkei here. Nikkei has been quite strong as well, as we can see. So here we are. Looking kind of bullish, but as we can see, price is into resistance here. It has made a higher high. So this one is neutral to slightly bullish here. But again, all these stock markets are moving together, so we'll keep an eye. If it doesn't break the resistance here, same thing, I will look for a move back down. But as soon as it gets through this, it can pick up momentum, and we can start seeing the move higher. So this is the thing about these resistance levels, because they are very strong. As soon as we see a break, there can be there's lots of stops on the other side, so it can just run through all these stops and get to the other side. So it can pick up momentum, so watch out for that. But for now, a neutral to slightly bullish bias here for Nikkei. All right, so that is it for today. Just want to remind everyone, right now I do have a promotion going on till end of this month, so till May 31st, so there's only about 1 week left. If you are interested about learning how to trade and improve your learn some of the basically the methods that I'm using with price action, you're welcome to take my course. Normally it's $495, $497. So after May 31st, we are going back to the regular price. So so you can basically, it's only $197. So it's so you can enroll for that. And of course, we'll start from the basics of support resistance level, and then we'll work into more of the complicated or complex topics. So the coupon code you want to use is "We Got This," and the coupon code expires on May 31st. So just if you are interested, this will be the time to go ahead and do that. Now, the Turning Pro Challenge also, again, the coupon code for that expires at the end of May as well, and that one is 30% discount. So instead of $997, so you will only pay $647. So that's a good deal as well if you're interested in learning. So please do check it out. And for him, to your concern, so if you're not, here's the deal, right? If you don't have money to purchase the courses, don't worry about it, because I put out a ton of stuff that's free. Absolutely every single day I provide daily analysis. It's completely free. So please don't, like, kill yourself trying to purchase courses and this, that, and the other. There is a ton of information that is available. The only difference between buying a course or versus free information that you get is that in a course, it's just a step-by-step. So you just you kind of work through that. Whereas in the daily, the daily market analysis that I do, or the different videos that I talk about, I just talk about the stuff that is going on in the market at the time, or if there's a good trade setup that I want to share with you, I may share that. So there is a ton of free information that is available. So please, if you're not able to afford it, don't worry about it, right? Just look at my daily analysis, weekly analysis that we do. I always talk about targets in the daily market analysis. So you're welcome to just use that information. And I talk through my reasoning as to why I think something will be bullish or bearish, what's going on in the market. So you're welcome to just use that free information for sure. But if you're able to afford the courses, of course, that's a better way to go, because you do tend to get that step by step. Okay, so that's it for now. You guys have a wonderful trading week. Like I said, there's a lot of geopolitical stuff going on. Pay attention to that. But, you know, don't worry. Check back on my YouTube channel and you will see the daily analysis on the YouTube channel. So that is there. All right, have a wonderful week and I'll see you again on Monday. Bye for now.